Ladies and gentlemen, good day and welcome to the Responsive Industries Limited Q4 and FY24 earnings conference call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company and it may involve risks and uncertainties that are difficult to predict. I would now like to hand the conference over to Tushar from Ventura Securities Limited. Thank you and over to you, Tushar.
Thank you. Good evening, ladies and gentlemen. On behalf of Ventura Securities Limited, I welcome you all to Responsive Industries Limited Q4 and FY24 earnings conference call. The company is today represented by Mr. Rishabh Agarwal, Chairman, Mr. Bhavneet Singh Chadha, Chief Financial Officer, and Mohini Purushottam Sharma, Company Secretary. I would now like to hand over the call to the Chairman of the company, Mr. Rishabh Agarwal, and for his opening remarks. Thank you, and over to you, sir.
Good day, everybody, and welcome. Thank you for taking your time out and joining us for the Responsive Industries Q4 FY24 earnings call. It gives me immense pleasure to welcome everybody, interact with you guys over the phone call, and we are excited to share our latest financial results and discuss the progress that we've made over the past fiscal year. We are responsive. We are a pioneering force in the flooring industry, and we are renowned for our unwavering commitment to innovation, sustainability, and customer satisfaction. Our diverse portfolio exemplifies our dedication to delivering the high-quality solutions that meet the need of our global clientele. In FY24, not only have we achieved our financial milestones, but we made significant strides in expanding our market presence, enhancing operational efficiency, and fortifying our strategic partnerships. Our performance is a testament to our team's relentless effort and our customers' trust and loyalty that they place with us. As we navigate the ever-changing landscape of our industry, we remain focused on harnessing the latest technologies, adopting the latest sustainable practices, and driving growth through real innovation. Our vision for the future is clear: to continue leading with purpose, create value for our stakeholders, and make a positive impact to the communities we serve. Today, we delve into the specifics of our financial achievements, provide insights into our strategic initiatives, and discuss the outlook for the upcoming quarters. We are confident that a comprehensive approach and direction will propel us to more heights, ensuring sustained growth and profitability. Thank you for being a part of this call. Let's dive into the details of our performance and future plans. Revenue from operations stood at rupees 1,886 crores in FY24 against 973 crores, up 11.64%. We had an EBITDA expansion standing at 261 crores in FY24 against 126 crores, which is an increase of 107.36%. The EBITDA margin is at 24.03% in FY24 against 12.94% in FY23. The PAT stands at 161 crores in FY24 against 24.39 crores in FY23. The PAT margin that we have the baseline in FY24 is 14.84% versus the 2.5% in FY23. I would like to thank so I would like to open up the call for any questions to go ahead with the Q&A session.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have any questions, please press star and 1 on your telephone keypad and please wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. We will wait for a moment while the question queue assembles. Our first question comes from Hiren Trivedi, an individual investor. Please go ahead.
Yeah, can you hear me?
Yes, sir.
Yeah, thanks for the opportunity. Just two small questions. One is on the capex done by your company in the last 2 years and the capex plan ahead. And also, second is the current level of debt on your books and any plans to reduce the debt going forward.
Could you repeat the second part of the question if you don't mind? The first one was the capex plan. What is the second part?
What is the current debt levels on your books?
Understood.
Yeah.
So, in terms of the capex numbers in FY23-24, we've incurred a total capex of around 180 odd crores. This particular capex is gone towards the upgradation of the current machineries to be able to deliver some of the technological upgrades on the flooring side that we've required. So, between the sustainability, the automation, and between the high performance materials, this particular capex has allowed us to decongest, the capacity and to be able to gain operational efficiencies. In terms of the debt, we are a zero debt company, so we have zero long-term debt. And, our plan is to continue along the same debt-free cycle for the foreseeable future. In terms of the future debt or future capex, we are right now going to continue the course. And, as the growth continues, we will evaluate plans down the road.
Yes, so any capex number you have in mind internally for the company in the next 2-3 years?
So in terms of the capex right now, for the next 2 or 3 years, we are in a pretty good place. We are not going to increase. The next capex can only happen once the utilization hits about 100%, which we anticipate to hit after the next 2 or 3 years. In that time, we will be in a new capex cycle. But for now, for the next 2-3 years, we are at a good level.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. Our next question comes from Vinod from MOSL. Please go ahead.
Hello.
Yeah. Hi, Vinod.
Yeah. Just want to ask, what is the breakup of the domestic and international business?
Yeah. Anything else?
And what is the current utilization rate?
Pardon me?
Current utilization rate.
Yeah. So the breakup between the international and the domestic business is about 40% domestic and 60% export. In terms of the overall utilization, we are between 55% to 60% odd in the utilization, depending on what the order book looks like. And, the utilization will continue to improve in the years to come.
Okay. And this 40-60 ratio will be maintained in future also, or there will be more of exports?
So 40-60, as we see it today in the order book today, we expect it to continue in the same vein. But there is a lot of interesting conversation. 40-60 is today the right, mix to take forward.
Thank you.
And if we continue to grow, the mix can change towards export a little bit more.
Thank you.
Thank you, sir. Our next question comes from the line of Yogesh Bhatia from Sequent Investments. Please go ahead.
Yeah.
Actually, I am new to the company. I had 2 questions. One, when we say we have 60% exports, what is the network of exports, how is it done? Is it done B2C, B2B? Do we do it under our brand? Do we have a dealer network outside India? And what geographies do we really export to? And similarly, what is the fashion in which the sales is done in India? This is my first question. And my second question is, what is our strategy? How do we plan to increase the sales? Is it through more dealer network or using the same network trying to get more sales?
Okay. Thanks for the question. Very insightful question. Let me answer your strategy question. Responsive sits at the intersection of 4 different events happening at the same time. Number 1 is the China Plus One diversification required from global supply chain, especially with a focus to the US. Number 2, the growing operational efficiency of India from an overall infrastructure, logistics, and just becoming a keen place for export-driven manufacturing. Number 3, Responsive has also been the resilient flooring manufacturer for more than 30 years. We are a leader in the space. And number 4, we have the kind of scale and ability and capacity to develop to service the large markets, including the US, especially the US. Now, in terms of the export strategy, in terms of the export sales you discussed, export has been a major focus in the US in the last few years to drive up the sales, especially from a B2C segment perspective. The way the supply chain is organized is Responsive is the manufacturer. We sell to our distributors. The distributors take it down to thousands of retailers where the touch point goes to the final consumer. Where we've made significant strides is that the Responsive brand is visible to the final consumer. So the merchandising and displays available in the retail stores has a Responsive brand. Now, this particular flooring we are talking about is a 100% waterproof rigid click system flooring, which has been a big innovation from our side. So where the value proposition is that we are a very strong brand with the right kind of values that we take to the customer, but combined with the product innovation and the aesthetics. So it's been a powerful kind of export message for us and export strategy for us. So in terms of the growth on export, we continue to increase the distributors, the retailers, and the retail touch points to the customers. And what happens is with the scale and as time is going on more and more, we are getting a natural growth in this business. So it's that's the whole idea on this side.
Okay. And what is the strategy in the domestic market? I understand there is a lot of growth, but do we have to appoint dealers and we have to sell it, or these are already who are doing flooring business?
So in the domestic market, there are 2 kinds of customers. There's the institutional customers like the railways and the OEM, who has been a part of our portfolio for a number of years. These customers are demanding performance-driven products which requires a high degree of technicity, where we have a great advantage compared to anybody else who can be in this field. So this kind of business is driven by a confluence of demand factors. For example, railways is driven by Vande Bharat and a lot of the investments paid by the Indian government. On the other side, the institutional bus business is driven by the orders that a lot of the bus bodies and OEs will take. So, for example, in terms of the OEs, there's a big push for the e-buses. So the e-buses, order books for people like Tata, Marco Polo, all these guys are pretty full, and we are the big service, vendor for them in terms of flooring. So that's been a big kind of growth story on the domestic side. In terms of the distributor dealer network, we continue to grow it, but the institutional engagement in India has been a great driver for us.
And,
okay,
sorry, continue, yeah.
And one other piece is the consumer side in India. So in terms of the B2C engagement in India, we are planning a ton of customer experience centers, about 100 plus experience centers over the next 3 years. So this is a combination of what we are looking to do between the COCO model, which is the company-owned, company-operated sort of experience centers, to spawn the franchisee option in India, where you get a vast dealer and distributor presence. Now, this is all to do with the residential business, and it's a big push to get the product into the residential ethos of India. and to start to compete with the category of tile. So if you talk about the big tile brands like Ajaria or Somani, we start to compete with them for this particular marketplace in India. So that's another piece that is domestically going to drive the sales.
Yeah. And I also believe that there is some sort of anti-dumping duty for vinyl flooring that comes from, I think China and Taiwan, right? So can you explain me the competitive landscape in India? Is it very competitive, or there is a lot of brand recognition or recall, and people go for branded products? How does that work?
So the competitive landscape on this particular product segment, which is vinyl flooring or resilient sheet vinyl, we've been the leaders in India for more than 30 years. We established this as more of an export-driven business in the late 80s, early 90s, and since then we've grown the technology and processes. So in terms of the way we look at competition, it is more to do with the global landscape, right? So there are global European players, American players, players from Korea and so on, where we look at it from a global pie. So if you look at this business, it's about a $45 billion global business, and and there is a number of large companies competing for this pie. Now, in terms of the anti-dumping to India, it is it's a protection against the low cost, low value Chinese suppliers, by extension Taiwanese suppliers, who dump product, it creates a bad name in the market. There are a lot of failures. It's not right up to spec. And where we are able to do really well is with the brand, with the quality and the service, right? So that's the main value proposition.
Okay. So our price points are way ahead of what is getting imported. Is that true?
Our price points are definitely at a premium vis-a-vis imports.
Okay. And if I may ask one more question, our receivable days our receivables are quite high. So is it a function because we do a lot of B2B business and it exports, so it takes a lot of time for the transactions to get completed, or what is the reason, and how do you see this number changing going forward?
So a good question. So the collection days have, in the current year, have gone up a little bit because our business has improved dramatically over the year. So with the improvement of the margin and the business, the quality of the customers that we are selling product to has been constantly improving. So it's a matter of a cycle. So this is a cycle this year that has set up the collections where it's looking longer. As time goes on, the collection cycle will come down, and we will end up with a collection cycle looking more robust. So this was, in a way, the collection cycle is more to do with the institutional customers, to do with the sort of the large buyers. And a lot of these POs have now been executed, and the collection cycle will start to sort of normalize as time goes on.
Okay. So, right now, I see as on 31st March, it is 500 crore of receivables on 1,000 crore revenue. So, which is quite large for a for a consumer product. So, any ballpark that we go to 150 days, 100 days going forward, or any thoughts on that?
Yeah, so, the receivables that you're talking about, first of all, it will come down dramatically as each day goes on. So, there's a lot of collections coming into the system. Secondly, the receivables that are due are from marquee A+ credit type customers. So, there is no issue about delinquencies or things like this. So, the receivables are in a really good place. And as the revenue and top line continues to grow up, the receivable numbers will remain consistent to about where they are. So we expect the receivable number as a percentage to come down as over time goes on, and also the number of days for the receivable to come down as the time goes on. So this whole situation will look even more robust as in the next coming quarters, as the quarters increase.
Okay. Operator, can I ask one more question? Is there no one, or is it okay?
Sure, sir, you can.
Yeah. So, and one more thing, I was looking at your financials. Over the last 2 years, there has been a significant shift in our margins. So can you explain me what is the reason for the change in our operating margins? Is it only because of gross margins? And if it is because of the raw materials, then what has changed in the last 2 years, 3 years?
So the raw material has not been a huge impact on the margin, right? So the main reason the margins have expanded and changed is to do with the quality of the product that is being produced in the plant and the quality of the customer who's purchasing the product. So it's everything to do with our higher value items. It's to do with to give you an example. Vande Bharat and Indian Railways, they have upgraded the specifications in a meaningful way. So those specifications have meant that you have more performing type products into the marketplace. As a consequence of that, we are able to expand our margins. It's just an example in the way where we have other customers who follow the same suit. So we've been able to drive the more value-centric, high-quality stuff through the market. So the focus has been on the margin accreditation products. Therefore, we are able to make this change in the margins in the last year.
Okay, so this is the LVP mainly because of you are saying higher quality product or value-added product, the margins have gone up, realizations have gone up ideally.
That's right.
Okay. Very good to hear. If there is anything, I'll get back in the queue. Thanks for your answer.
Thanks.
Thank you, sir. Our next question comes from Nishant Sharma from Nuvama PCG. Please go ahead.
Opportunity, sir. The first question from my side is about what is the current order book as on hand, and in terms of exports and domestic business, what is the difference in terms of margins and the working capital requirement in each of these segments?
So the order book that we have on hand right now is for the next 3 to 6 months. So we are pretty good in terms of the next couple of quarters in terms of what to run through the plant. To answer your question on margins, the domestic market and even the export business is now delivering relatively similar margins because the focus has been on the value-added items in both the segments. So in the case of exports, for the US market with the SPC click and the rigid LVT products, there's been a big B2C kind of focus and a push through the distributors. So that has yielded in, good margins for the business. And in terms of the domestic business, the institutional customers like your railways and OEs have also, yielded good margins for us. So one of the key focus for the company has been to drive good margin, good sort of products through the business and through the manufacturing. And, this year's result is a testament of that effort.
Okay, and second question would be from a vision point of view, say 3 years or 5 years down the line, what is our vision in terms of top line? And what is likely to contribute to the business? Hello, sorry.
Sorry, could you repeat that question? I think top line, and could you repeat the question? I didn't understand fully.
So I'm saying from a 3 years or 5 years down the line, what is our vision in terms of top line that we can achieve, and which are the segments that out of which segment will be driving the growth going forward?
Okay. So in terms of the top line, in the next 3 to 5 years or so, we can hit about 2,500 crores in terms of top line. So, in terms of the confidence, I would say in the next 3 years or so, we should get there. Now, in terms of the margins, we will be able to maintain the similar EBITDA margins going forward year on year, because now the baseline on customers, both in export and domestic, are pretty set. And we need to just keep forward driving the revenue side of things. So we need to drive the business.
Okay, and will the current capacity be good enough for these 2,500 crore in next 3 years time frame? Will be good enough, or will new capacity addition over there?
Absolutely. So right now we are in a utilization state where the year-on-year growth allows us to hit these numbers in the next 3 years without adding any capex. So our capacity is good enough up to these numbers. Once we get here, then we will revise, for the next growth target, what to do next.
And I guess on the books we have about 251 odd crore of borrowing. So will that be repaid off, or that will be more like a continuation or a working capital kind of a loan?
That is a working capital kind of a loan. So the working capital is to just finance the operational mismatch between cash flows. That's all.
Okay. And broadly, previous participants asked this question was unable to listen properly. In terms of working capital, most of the capital is stuck on the data side, which partially compensated from inventory reduction and partly because of the days improving or increasing.
Hello,
So, yes, sir. Yes, sir.
I'm so sorry to interrupt you. Could you please place your phone a bit far away and talk?
Sure.
Yeah.
Is it okay?
Yes, much better, sir. Please go ahead.
Yeah. Hello.
Yeah, go ahead.
Sorry. So I was repeating that in terms of working capital days, we have seen that the credit debtors is bit high, which was compensated from a reduction in inventory days and also increase in payable days. So going forward, if you are seeing that there would be better or the increase in sales, so inventory, can it go up? And in that scenario, the working capital days as a whole will be somewhere in the 160, 170 days as it was in FY24, or it is likely to come down?
So the answer to working capital is that it is very likely to come down in the next fiscal for us. There was in the past year, there was a sudden jump in interest rates that happened across the board. So the sudden jump in interest rate raised everybody's cost of holding products, holding goods, and holding stock. So our working capital draw increased to support the US side of the business to help our distributors to continue to grow and continue to sell the business. So this was the support from our side. So, now this cycle is more or less over and we don't expect interest rates to continue to go up. So we think the working capital cycle next year will definitely come down by a number of ways.
Just last question from my side. Could you help us understand who would be our largest customer or top 5 customers, both from the export as well as from the domestic side?
So on the domestic side, we have the Indian Railways. We have a number of bus bodybuilders like Tata, Marco Polo, Ashok Leyland, these guys. In terms of the exports, we regularly export to the US. So we have some distributors like Harrigan, Elias Wills, All South Flooring, who make up our top customers.
Thank you, sir. I'll fall back in queue and all the very best.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question comes from Vivek, an individual investor. Please go ahead.
Yes, thank you. See, there's a little bit of confusion between the results that you published and what this website screener is reflecting as your annual numbers. Am I right in saying, just to clarify, this is an external website, but is your number for the year 671 crores and a bottom line of 31 crores for the full year?
I'm sorry. What is your question? I've not understood your question. The top line is.
My question is, what is your correct annual turnover top line?
The annual top line is 1086 crores.
1086 and 161 crores is the net profit, right?
That's right.
Okay. So you posted some stellar results. I'd like to understand, the jump in profit is like 6x. If you can kindly throw light on how this came about and what is the sustainable growth going forward, both top and bottom line. Thank you.
Yeah. So the growth in the margin and the growth in the business has emerged from the cementing of our high-value flooring products in both our institutional customers domestically and our export customers mostly focused on the US. So in terms of the net profit, EBITDA, and the revenue numbers that we see here, it is a baseline that we have established where we've done through our sales and marketing activities, driving the high value items to the plant. Now, in terms of the growth in the following years, we expect to maintain the margins and the margin driven products, and continue to grow the top line based on the current margins that we established in FY24.
And 11.5%. You expect the same trajectory to continue?
Yeah, absolutely. So we expect the same trajectory to continue in terms of the top line, and we expect the same net margins to continue, similar net margins to continue through the year.
Okay, which is around 16% is your net margin on net profit. So that will continue.
That's right.
Trajectory will continue. Thank you.
Thank you, sir. There are no further questions. Now I hand over the floor to the management for closing comments.
Yeah. I would like to thank again all the participants for taking our time and attending our call. We will endeavor to hold a con call every quarter to keep you updated about the latest developments of the company. In case you have any queries, feel free to reach out to us at cs@responsiveindustries.com, and we'll be swift in responding back to you. Thank you everybody for your time this afternoon.
Thank you, members of the management. Ladies and gentlemen, on behalf of Ventura Securities, that concludes this conference. Thank you for joining us, and you may all disconnect your lines now.